For that, well, let's welcome our next guest. We're Mithun Aswath, Managing Partner at Kivah Advisors, who joins us on the show. Hi, Mithun. Good afternoon and good to see you. Well, earnings season clearly has been very, very muted. And coupled with that, suddenly there is this optimism about China after a couple of years, actually, that they're going to do something to kickstart the economy. And that could probably be the reason that these FIs are selling. How would you approach market as of now? React to the muted earnings and the way ahead.
Yeah, hi. Afternoon, Nigel. I think, our markets obviously have corrected from the recent highs, primarily on, first on account of those FI selling. And then we've seen a little bit of, tepid earnings so far. I think Q2 was expected to be a little bit muted, but we came into Q2 when markets were a little bit high. And so, we are seeing the reactions which are quite vicious on either side. When earnings beats are also there, the moves are quite sharp. So I think there is going to be volatility in the next couple of weeks. We're going to see even the US elections as well. And there the verdict either way could impact even global markets, because one of the incumbents talks about raising taxes, while the other one is talking about cutting corporate taxes. Having said all that, on the domestic level, I think one needs to just look at valuations. And whenever valuations do come to an interesting point, though near-term earnings look a little disappointing, one may want to start taking positions because we've had a good monsoon. And if Q3 starts, improving, then, stock prices which have fallen can recover. I think there is a fear in the market that this could be a slightly extended period of a slowdown, but we still don't have confirmation of that.
Okay, all right. So that's about the market move. Anything in the markets which you think is now a good entry point, Mithun, or anything that stood out for you in earnings so far? I know we are still in the middle of the earnings season, but anything that you liked?
Yeah, I think in the earnings season, more than the earnings season, I think where are expectations low and where do you see potential improvement? I think the cement sector is one space where we've seen lackluster couple of quarters, but commentary seems to indicate that Q3 and Q4 should be better. So pockets within that space could present an opportunity. I think your entry points into stocks will be very important here. Because even where earnings growth has been very good, stocks are priced to perfection. So any disappointment in the subsequent quarters could hit you quite badly.
Mithun, do you have a view on the real estate space? If you look at the index, forget about individual stocks. The index is up 45-50% from last Diwali to this Diwali. So it's been a very happy Diwali for them. Any view on the real estate space? Would you play the core real estate companies, maybe the financiers or some of those ancillaries?
Yeah, Nigel, I think to play, real estate now, some of the stocks have, given you handsome gains. And we've seen a little bit of tepid demand in the last quarter. But individual companies are different because they have launches in the first half and the second half. But it is a little bit more of a tricky space. I think some parts of the real estate, ancillaries have kind of underperformed, and those could be areas where you would want to potentially look at, be it sanitary ware or tiles or on the plywood space. These are spaces where you may have more secularity of growth. And the current weakness could potentially be good to accumulate.
Okay. Mithun also wanted your take on the auto space, because we had that commentary coming in from Bajaj Auto, the stock fell, especially the two-wheeler space, of course. TVS Motors also, the stock fell after numbers yesterday. There was some margin pressure. How do you play the auto theme? Is it via auto anchors? Is it the OEMs? And are valuations now looking stretched here?
Yeah, I think auto from a complete decline post-COVID, and the recovery has been very sharp. but stocks have also moved ahead of time, and some of these are trading expensive to historical valuations, and hence any small disappointment or outlook or perception of a slowdown in terms of outlook, especially on the two-wheelers, we saw stocks correct. So I think the re-rating has happened. From here, I think you will get earnings growth at best. There are a couple of there is one two-wheeler company which does not really cater to the the commuter segment and plays more the higher end. That we continue to be positive on because it has still a small market of the overall two-wheeler market. You'll have to pick and choose within the space. I don't think it is as easy as it was maybe a year and a half ago.
Mithun, what about this electronics manufacturing space? That provides you with a long runway, right? There's a big opportunity out there. So you'll have these knee-jerk reactions. In spite of this big opportunity, some of these stocks have already factored in part of the good news. So how do you approach that space, and what do you like?
Yeah, I think that the two large listed ones have performed very, very well, and that's again considering the current market environment, it can be susceptible to disappointment because right now you are pricing in the growth. If in the near term growth does not come in or execution does not match the growth expectation, you could see again some of these correct. We've seen that maybe a couple of years ago, and then they rebounded. I think you'd rather pick ones which are more diversified in terms of product range, not only an AC manufacturer, but having 3 or 4 legs to the business, which gives it more of a durability and secularity. Otherwise, it's going to be a little volatile there.
All right. We have Adani Total Gas's number at the bottom of your screen. The stock is surged 6%. The net profit is up 7.5% on a YY basis. It's looked like a good, decent set so far. Of course, we have to look at the quarter-on-quarter numbers as well for this. But do remember, this quarter we did see higher gas costs come by, and that could continue now because of lower APM gas allocation in Q3. But the stock on decent set of numbers that the company has seen this time around has surged just up around 6%. In fact, there's Laurus Labs as well. The net profit has come in at 20 crore rupees. This compares with a poll of 46 crore rupees. And this has been the case with Laurus Labs. It has, in last couple of quarters, disappointed versus with what the street has been working with. So far, we have the net profit number. The stock has come off from the highs, is at the day's low. We'll have to see what the geographical breakup has looked like. The ARV segment, how has that performed this time? Because that has been under pressure in last couple of quarters. So the margin number will be very important to track in both the segments, the ARV and the non-ARV segments as well. And we'll get in Winnie as well to tell us how the numbers looked. For now, it looks like a big miss. The revenue is largely in line with estimates at 1,224 crore rupees, compares with a poll of 1,287 crore rupees. It's a big miss on the net profit, and that is something that we'll look at properly, Nigel.
Well, indeed. Let's get Mithun's view. Mithun, how do you approach some of these pharma names? Some of them are doing very, very well. I think as a sector, it's very difficult to look at it because you'll have to look at stock-specific action. Laurus, for the last many quarters, they are talking about the margins will recover the next or the next or the next, or maybe sometime in FY26. We know there is a potential. We know at some point in time the delivery will come. But I think for the last many quarters, the stock is in this range only because those numbers are not really coming about. And the EBITDA number is much lower yet again.
Yeah, I think, it's quite difficult to predict in some of these companies. You'd rather play, in pharma, a company which has both maybe a domestic business as well as an export business, or just pure play domestic pharma businesses also have done well. And they are more secular in nature. I think that could be a space that one can look at. Even in the recent past, you've seen, the diagnostic companies after doing very well in COVID, then went through a slump, have, recovered. And, most of these companies are indicating better pricing power and margins improving. So that's another space where if there is some pullback, could be looked at, as well as, maybe the hospitals as well. But there, become a little bit pricey now. So you'll have to be selective there, or your outlook has to be a little longer for you to generate returns.
Okay. All right, Mithun, thank you so much for joining in today with your take on the markets and specific sectors as well. We are talking about Laurus